Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9, our morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now, where everyone is talking about the bank deposit guarantee scheme and whether it should be extended to include wholesale deposits as well as retail ones. National Party leader John Key said yesterday the government is not being urgent enough about extending this guarantee to wholesale deposits, and he's warned that the banks could run out of their funding lines by Christmas. Others aren't so sure. KPMG's partner Andrew Dinsdale says their Australian parents of the big banks here should provide support. But there are some rules that the Australian regulator has, which says that no more than 50% of an Australian bank's Tier 1 capital, its main core capital, can be exposed to New Zealand. And there's some suggestion some of the banks over the next year or two might be bumping up against that limit. Also, the Reserve Bank has room to lend heavily to the banks here by lending to them in exchange for mortgage-backed securities. Calls, however, are growing for parliamentary scrutiny of this plan. Brian Fellow from the Herald came out this morning and called for parliamentary scrutiny, and I called yesterday for a recall of Parliament. Dramas about the scheme are happening overseas as well, where in Australia the biggest mortgage trust looks set to suspend redemptions as investors rush for the guaranteed safety of bank deposits in Australia. The commercial paper and managed fund markets are being hurt there heavily, and there's a lot of complaints to the government about it. Finally, overseas in China, growth slowed to 9% in September, but their inflation there will be under 5%, probably lower than New Zealand's inflation rate. We'll see that later today. Pakistan is basically bankrupt. It's asked the IMF for help, and the Dutch government had to bail out ING overnight. That was 90 at 9 with interest.co.nz. I'm Bernard Hickey.